Hello, everybody. This is Hosky with the Hosky Token Project. Yeah, we're going to talk about red flags like anonymous undoxed devs and teams. LOL. So we're just going to talk about red flags in projects, and I have no clue why they invited me. I guess because I am a red flag. So take it away, Dumpling.
Hey everyone, thanks Wing Riders, thanks Husky for the space. I must admit I'm kind of panicking. I did not prepare my self introduction. I am Dumpling, just don't call me bullish. Very much appreciate the topic today. Looking forward to learning a bit more. I feel the rugs or scams on Cardano are going to be more well rounded, more sophisticated than any other chains, so we need to be more careful.
Hey everybody, and thank you Wing Riders for hosting this space. My name is Alex. I'm part of the Tap Tools team. We do token data on Cardano. Yeah, I'm really excited to be here, and doing your own research is kind of something that's really important to me. So yeah, I'm glad we're having this space.
Hey, how's it going, everybody? So I'm Subcritical. I follow RealFi and DeFi projects on Cardano. So I'm always on the lookout for rugs and whatever. I try to mention as much stuff as I can, and so sometimes I do not tweet directly about projects. I do tweet about things that are going on in projects. So.
Hi, thanks for having me. Sorry I was late. I'm Rick. I work with Drip Drops. I do the risk assessment on tokens there. And I've read probably, I would say, between 50 and 60 tokenomics papers in the last 8 months. So I have got a pretty good idea of what they look like. And so maybe I can help share some experience there for this space. Thanks for having me.
Fantastic. I'm sure we're going to use your wisdom there and your knowledge there. So, welcome everyone. Without further ado, let's crack into the actual sort of topic area. Obviously, with all the problems that have been occurring at the moment, and previously, realistically, with a lot of crypto projects, unfortunately, not delivering what they're saying and becoming rug pulls. FTX is the latest, obviously, and luckily they're CeFi and not DeFi. So that's still ongoing. We're going to delve into several areas today, about 6 or 7 areas, and let's go to the first section. And it's really about the project itself and its deliverables, things like the docs, white paper, roadmap, things like that. So because you started last, Rick, I think we'll get you to go on this one first, and we'll just go around the room.
Yeah, so as far as the project itself, something for people to consider is, now again, none of this financial advice, of course. It's just, how do you look at risk? So the way a project, when it launches, is you got to think about how long has that project been in existence without a working product, or does it have a working product? Because the risk, if you look at it from a risk perspective, it doesn't matter if it's a scam or if they're incompetent, is why the project fails. To the user, it looks the same. It appears the same, whether it's a scam or incompetence, because what a scammer will do, much like FTX, is by the time they're done with their scam or their scam gets exposed, what they'll do, what a successful scammer will do is they will feign incompetence. So how does a scammer look successful? Well, they have to look like a real project, even if it's just a fake front and there's really nothing behind it. They have to try to look as real as possible in order for them to be successful. And as far as whether it's incompetence, what happens is a team might bite off more than they can chew, and they either don't have the resources, the funding, the technical expertise. There's something that they've missed that they don't have enough of that's going to cause them to fail. And so I generally use time as a measurement to determine risk of failure. You probably heard me say it before, but if people are launching a token based on just a promise and a pitch deck and they have no working product, that's extremely high risk. And so when I look at crypto, I say, all right, all crypto falls into the high risk category. Just all of it does. But how high is that risk? Is it moderately high? Is it acceptably high for myself? Is it simply high risk, or is it very, very high risk, right? So there's a scale of high risk, and if people can get good at gauging that, it will help them decide not is the project a scam or incompetence, or is it going to fail, but it helps them figure out what is the risk, because the scam or the incompetence, it looks the same to the user. It has the same effect. It has the same outcome. So yeah, that's kind of like my general synopsis is the first thing to look at.
Excellent. That's great insight. Husky, we'll come to you next. In terms of the project and the deliverables of the project, you know, what insights can you give us on in terms of what would be a red flag and what wouldn't be?
Well, I think that the biggest red flag is, what are they actually promising you? Again, this is sort of ironic considering the source and who's saying this, but are they promising you a lot with little to no risk, or so they claim? Are they telling you that, if you give us your money now, but you have to give it to us now, not later, not in the future, you have to do it now, else you're going to miss out? That usually, to me, would be a red flag that I would be careful with. And so, yeah, it's anything that promises you a high return with little to no risk. I think that's in crypto, there is no such thing as little to no risk. When even our quote unquote main assets are volatile, 80, 90% either way. So just careful when it comes to that. And when Rick was mentioning about token, you got to be careful about where the tokens are concentrated, who holds the tokens, who has the wallets. That to me also is a huge red flag, or if not a red flag, something to be careful. I don't think people understand and that whoever holds the tokens literally can destroy that particular token. So again, promises, and keep an eye on where the tokens are. But please do not ask me where our tokens are. That's all I'll say.
Great answer there, Husky. Thank you for that. Very interesting. Let's move on to what not bullish, just dumpling then.
I appreciate that, Karen. So in terms of deliverables, let me start with roadmap. I found roadmap in crypto to be so interesting because it's super subject to change on a whim, or maybe the founders didn't feel like it, or they fly to south of France to take a vacation, and then the roadmap will change. And what I realized is in crypto, a few people follow the roadmaps closely. I mean, we try to understand the team members' experience. We try to understand the token economics. But I don't see a lot of people following and tracking the roadmaps. Take an example, when we look at Ardana. I remember only a few accounts were ringing the alarm bells when the roadmap was being changed. A few people were tracking that. Well, most of us are just trusting in the teams because they were hosting regular Twitter spaces and all the good stuff. So moving forward, I believe keeping a close eye on the roadmap is one of the ways we can avoid potential rugs. Another thing on the deliverables is to measure feasibility against the claim the team is making. Bigger the claim, the more closely, the more diligent we should look at the feasibility of the budget, of the team members, of the roadmap, of even the regulatory side. Is it plausible and feasible? In crypto, I feel like we're so emotional driven. And when we join a Twitter space and listen to some founders just being passionate, truly believing in the project, then we cut them a lot of slack. It can work both ways. It is innovative. We need to put some faith in them. On the other hand, we mustn't forget to measure the feasibility and the claims that they are making. Huge promises, small resources, limited experience, that is a combination for disaster.
Fantastic. Thank you for those insights. Yes, absolutely. Sort of, the roadmap and it really being delivered is a very, very important part of the process. And when you see one or two, I suppose, milestones missed, you should be raising orange flags at least. Thank you for that, Dumpling. Yeah, by the way, guys, please keep retweeting us and mentioning us. Get more people into these spaces so they can really enjoy the wisdom and knowledge of our speakers. Appreciate that. Alex, we move to you next.
All right. So I think it's really important in crypto to understand that when you're investing into these projects, they're not just projects, but they're businesses. And so Rick and Bullish and Dumpling, rather, really touched on it well. Is that it's roadmap and time frame, but also there's another part to that equation is funds. So how is this business going to sustain for a year, 2 years, 10 years down the road? And if there's no answers to that, then it's a major red flag.
Yeah, absolutely. I mean, a lot of people, when they're in crypto, they look at price and they don't really realize that, there's actually businesses behind this. We call them projects or whatever we like to call them. They are businesses. They have to be very much operational. They have to have sound, obviously, business principles as well to go with them. So fantastic. Thank you for that. Subcritical, let's have some of your insights.
Yeah, I definitely agree with a lot that has been said here. I mean, we've seen a lot of projects, especially even like Ardana, right? Was releasing like UX designs and everybody was clapping and talking about how great it was going to be. I mean, it's easy to show those kind of graphics and things like that, but if you're not seeing like code development like on GitHub, like that there's actually work being done behind these things, it's definitely a huge red flag there.
And to add on to that, I think one of the when it comes to I think it was Alex that made a point about finances. It's easy to build a business during a bull market. It's a whole different animal to stay afloat and not go under during a bear market. If the company's not managing finances properly, you're going to be in trouble, especially those that maybe sold out an NFT project or a token during the bull market, expecting the bull market to never end. Right now, those are the people that are getting caught with their pants down.
So I think between the panel of speakers, we've covered everything from the roadmap to the promises that should be kept and the timeline that should be monitored closely to the actual kind of business as a business to be assessed, not just as a token or a price or something like that. And obviously the code development. Very good insights. Let's move on to the next area, which is communication. Obviously, what we hear and see and observe realistically is through the communication of the projects. And we form, obviously, our kind of views of a project through that communication. What can we sort of rip apart within that communication to give us clues about the authenticity or otherwise of the project? And I'm going to start off with Subcritical this time.
Yeah, we've definitely seen, like going back to the roadmap with communication, that sometimes they just like change things on the roadmap. Like the biggest thing with Ardana that bothered me was that it switched and it was just like, hey, we're no longer focusing on our stable coin, which was the only thing anybody wanted from it, to developing like a DEX or something. It's just the communication when like they've been talking like so much about how great they're doing, and especially like it was almost like a year before that they said they were like ready to launch and they were just waiting on like, Cardano to catch up. So it's just like things like that. The communication just doesn't line up with kind of what's going on in the ecosystem. And I think we can, work that out by having like founders from other projects, kind of coming out and voicing where we're at in the ecosystem. So that way we can all stay on the same page.
Fantastic. Very interesting point. Alex, enlighten us.
Yeah, so as far as communication goes, it's one of the most important parts of a project or business when it comes to just being on the same page with your investors. So a red flag that happened a couple months ago with Ardana is I found that there was just massive amounts of ADA and liquidity being yanked every single month, and I made a tweet, made a couple of threads about it, and they decided to have a Twitter space to quote unquote communicate with the community. And I was never brought up to speak. I was the one who brought everything to attention, brought essentially the spotlight to the situation, and I wasn't allowed to speak. And so that to me was just a major red flag. If you're not willing to answer the hard questions, then the communication is not there. It's just the biggest red flag you can have as a project creator if you're dodging questions.
It's so true, right? Yeah, so someone raises an issue and the project essentially tries to ignore it, really. And obviously we're all connected through Twitter and various other social media channels. So we hear and, who's actually raised these. And Well, that's a really good point. Thank you. Dumpling?
Yes, I want to bring a new concept, just made up myself. Effective communication. So what we observe is that the rugs are evolving and adapting. So projects they went from little to no communication to constant communication because they realize we are getting smarter. If they don't talk to us, we just think it's more likelihood they're a rug. So I think it gives people a false sense of security and reliability when some projects host regular, like weekly Twitter spaces. And that's where we need to adapt and realize that we need to dig deeper and understand communication weekly spaces doesn't necessarily equate effective communication. So instead, we need to require updates of substance, such as statistics, actual tech progress, and even asking how are they spending the money, how are they going to survive in a bear market, for example. Asking all the non-fluffy questions to abstract valuable information.
There's very sober advice there in terms of kind of looking at a project and obviously not just looking at the fluffy stuff in terms of the community, the solid stuff. Great stuff. Husky.
Well, I think when it comes to just the communication aspect is how they handle, I want to call them detractors, or what most people like to call FUD. Are they professional about it? Are they being transparent about any decisions or changes that they're making? I think that's a big red flag is if you approach a team or a project and you give them valid information or valid concerns that you have about whether it be their tokenomics, the claims that they've made, or anything like that, and the way that they respond speaks volumes. If you start by banning or ignoring, like Alex mentioned, anybody who has doubts, that actually is a big red flag. If you want to ease the mind of the community, you should just answer the questions honestly. If they're bringing up a concern, just be honest about it. If also, I think a lot of projects don't realize this. It's okay to say, I don't know, let me look into it, or I'll come back to you. You don't have to have the answer immediately then and there. It's just a matter of actually addressing community concerns.
It's surprising because feedback, whether it's negative or positive, when it's actually meant with good intention, realistically should be an opportunity for a project to actually embrace it and look at it much deeper and then, to take it on board. Absolutely. I mean, that's a really good point. Thank you there, Husky. Rick?
Yeah, communications is the hardest part because if someone can communicate whatever they want, it doesn't mean it's true. The question would be, is there any evidence that shows what they're communicating is accurate? Because if someone is in trouble, then they're inclined to say, we're not in trouble, we're doing okay. All right. They're inclined to tell you that everything looks good. And if you guys recall, I had many different budding projects on my podcast on Cardano Live, including Wing Riders and Sunday Swap, and a lot of projects that delivered. But I also noticed a pattern of some of these projects are at risk because I can't see any potential event horizon whenever they're actually going to deliver. And I started noticing, well, the longer these projects go, and companies, businesses, right? So we got to kind of raise our standards in crypto, us as the individual people who are buying, selling, trading these tokens, yield farming them. And we have to say, where's the link to your app? Show me a working beta, and those can be fooled too. People can say, hey, look, here's an alpha, and they just make up a ghost front. I've seen that with Traxia, which was one of the first failed projects on Cardano from many years ago. There's many different reasons why it failed, but they put out these little magic wizardry things that people can look at and say, oh, look, they have a working product, when in fact they actually don't. When someone with a little bit of expertise looks at the app, they can actually say, well, what is that thing? Does it actually function, or is it all smoke and mirrors? And there are times where it is smoke and mirrors. So I'd still say the best thing to do with communications is, reach back in time and say, how long ago did they start selling this token? How long has it been vaporware? And how long is it going to be until they actually deploy the product? Because on the communication side, people can tell you whatever they want because they don't want to look bad. So that's just something to think about.
Totally agree with Rick. I want to add to that a bit extra. The notion of vibe check or intuition. So by listening to people talking on live spaces, it gives you a lot of information on the team that they don't write on their websites or white paper. So I don't think trusting your intuition is necessarily a bad thing. Sometimes the vibe check can tell you a lot. I'll give you an example. Flicto went on my space early on in their days. You should check out that space. I uploaded to my YouTube channel. It's an absolute gem if you need to fall asleep. It's about 2 hours. So the vibe was just off. It was full of fluff, but they were very eloquent. They sounded very passionate. But you know what? I didn't feel like I learned anything of substance from the 2 hour conversation. And they were just way too flat or indifferent when we were asking some difficult questions. So hard to point a finger on it, but I guess you can say the vibe was just off. So this is not a scientific method, but I thought I'd bring this up as another tool in your toolbox when you join some live conversations. Listen to not the words only, but listen to their demeanor, how they respond, what kind of emotions or lack thereof is there.
I wanted to follow up with Hosky on the point of FUD, and that was a really good point to bring up on how teams respond to FUD. Well, it depends on what the FUD is, because again, communications are very difficult. And I'll give you an example, like with Ardana, for example, when we ran the risk assessment and determined that we were not going to deploy their token, we posted a tweet and said no further comment. And the reason we said, this is just an example, right? And the reason that we said no further comment is because we're not going to put a client's details out in public, because people would see that as FUD and they would attack the FUD. We tried to keep it as simple and professional as possible and just say, okay, we can't drop it. There were other issues behind their token. Primarily, it was the risk, right? It doesn't matter what caused the risk. There were just several risks involved. But as far as FUD goes and how the team responds, sometimes no response is okay, right? Because there could be 10,000 or 50,000 people out there yelling at you that something is FUD, and they're trying to demand or provoke a response. And sometimes no response is okay, or sometimes there's a simple response is also okay, simply by saying that FUD is not accurate. So yeah, just wanted to follow up and reinforce that.
Obviously, communication is a very important part, which ties up with other areas like the deliverables and the project that we were discussing. Does the project actually communicate correctly, and do they actually then deliver that? And also, we got sort of avoiding addressing issues. That's another important thing came from Hosky. Professionalism and transparency, obviously, of the communication is very much important, and taking negative feedback and really as an opportunity. And I love the vibe check. Okay, I think we've covered the communication area. Well, let's move to another really important area, obviously, in the space, which is community. Community is everything. We are, as a project, the community's desire, realistically, if we think of a decentralized project that wants to eventually become a DAO, to be controlled by the actual community. So, a very important area. What would you say? I mean, we're talking about red flags, don't forget. So what would you say when you're looking at a project and their community that might spark your kind of, inner sense of there might be something wrong here?
Yeah, so I think community is one of the most important parts when doing your own research. And this is a big mistake that a lot of people make, is you can hop into a Discord, for example, and ask some questions around the community. And a lot of times people will give you the answer you want to hear rather than just the actual truth. And a lot of times this happens because the community has their money invested. They're tied up, essentially, and they want to see the project succeed. And just taking everybody's word in the community for what's going on instead of actually thinking independently for yourself is a big issue in our space. So definitely think for yourself and don't just take somebody's word for it, but also think critically on your own.
Fantastic. So avoid kind of herd mentality in a way, and just because the whole community is saying, we've all been guilty, including myself, early days, sort of listening to the community and thinking, wow, yeah, this is a great project, and never even reading the white paper or even looking at the website and buying the token. So we've all made these mistakes and should be avoided at all costs. Thank you, Alex. Subcritical.
Yeah, definitely agreeing with Alex there. There's a lot of sunk costs kind of going on, right? Like a lot of people spend so much time in these Discords or Telegrams and investing in these projects that a lot of the times they'll look past all the flaws and just kind of continue to keep spewing the same stuff over and over again. A lot of things too with the community is like ensuring that there is a community. Sometimes you go on a Discord or Telegram, there's like nobody there. There's like no interactions going on, nothing really happening. And then another thing that's kind of weird too is like projects have like alt accounts and stuff like that from like team members that go around and they'll like try and, like fight FUD and stuff like that, like not using their own accounts, which is really weird too. So just kind of like be careful out there, like form your own opinions, look into your own research, and don't just like believe anything you kind of see out there.
Community is everything with a crypto project, with more some than others. And I think the most important thing about your community is organic growth. Just natural growth of the community without the use of like artificial means or, like he said, cheating and buying out followers, which happens quite often in the space because a lot of people associate a large number of followings with reliability. As Subcritical mentioned, Discords can be extremely misleading. There's some projects that get tons of engagement on Twitter. We're talking in the thousands, and then you go into their Discord and they're completely dead. Like there's like the last message was 4 hours ago, and that message was, "Hey, are we still here?" So again, you got to see both aspects of community. First of all, a large community does not always mean that it's the best. An engaged community is what matters. And in this case, again, look at the numbers. Numbers can be faked, so that is true. And I think Subcritical was the one that mentioned that there are people that maybe have multiple accounts that they use to defend their own project. I've seen this firsthand with another project that I was looking into. So you just got to be careful. And not only, so let's talk about community. The community itself shouldn't just be involved within the community because that's an echo chamber. The community should be involved with the entire larger aspect of the community, in this case, the Cardano community. Because if it's all about me, and not about the ecosystem as a whole, to me, that's a red flag. That usually means that you're trying to pump your own bag so you can, move on. So it needs to be something that's beneficial for your project, but you should also be benefiting the large ecosystem as a whole.
That was really interesting, the point you raised. You go onto a Twitter and you see a lot of engagement, and then you go to a Discord, they're kind of a closed channel, and there's like no interaction. So I never thought about that, but that's a very interesting way to kind of assess perhaps the authenticity or not the actual project. Rick.
All right, well said so far. I'm going to read a quote from Nathan Kanapi, a person I follow on Twitter. And Nathan said, "The biggest red flag in this space is when a community pops out of nowhere with a ton of engagement in one particular project, but has no interaction with any other community in the entirety of crypto Twitter. This is usually a trap for noobs who think they found a new blue chip early." And I believe that statement applies to FTs as well as NFTs. He was referring to FTs. So be alert to the purchasing of marketing. There's marketing packages that will purchase people a bunch of bots to follow them on Twitter. They can purchase the engagement to build that community. And also be alert. There are some Telegrams and Discords that may be inactive, but they actually have a working product out on the street. So I'm going to bounce back to, do they have a working product, right? So their Telegram might be inactive, but their product works as described. So also be alert to that.
Your community is your brand. What I mean is brands/projects attract people who think alike. So that's the importance of community and reading the community. We can deduce to a large extent by observing how a project's community behaves. Of course, there are outliers and black sheep, but watching how the majority of a certain community behaves and see if it's something that cultivates real growth is one of the strong tools that we can use to assess projects. Some of the red flag behaviors of certain crypto communities, I'm sure many of us are aware. Moonboy spirits, up only one Lambo, those are the obvious ones. The other one is the culture of shushing people not to ask questions. I know some projects, if you ask difficult questions, community members are quick to guilt trip you, to judge you, and tell you to stop fudding. That's another sign. Finally, is how the community treats criticism and actual problems in the project. It's only normal that startup projects have problems. So we will watch, are they just getting defensive only? Defensiveness is very normal, but after the defensiveness, is there any self-reflection from the community, not just from the team members? Is there any self-conscientiousness? Or is the community just brushing things off and hoping the problems go away? So, to London Reed, observing the quality and the culture of a crypto's project's community is part of assessing the quality of the project itself.
Communities that don't want you to ask questions, that's another really good area that was brought up. And obviously engagement, beware of the fake numbers, organic growth to also be kind of considered as the only way forward. And community must be engaged in the wider environment as well, which is excellent. I mean, we've covered 3 areas, guys, and so much wisdom. I'm kind of whizzing off the various areas that have been covered in terms of red flags, insights, and really enjoyable. And if you guys are enjoying it, please retweet and mention us to get more people in to really kind of utilize and enjoy this. Thank you. Let's move on to the next area. And it's really about sort of token price behavior. Big words, but really, what are you looking at when you look at a price of a token? And I think I'm going to marry that, guys, with the tokenomics. I know they're 2 separate areas, but I think because we're talking about the token itself, let's talk about token price behavior and tokenomics. For that, Rick, I think if you don't mind, I'll let you to go first because you've read so many of these great white papers or not. And just enlighten us with that, please.
Yes. So the first thing I got to say is I don't understand tokenomics because I've read many of these different papers, and almost every paper has some sort of pie slicing where there's a percent to the team, there's a percent to the community, there's a percent to the liquidity pools, there's a percent for marketing, there's a percent for pre-sales, there's a percent for early investors. And I cannot make sense of any of them. I don't think we have enough research. I don't think we have enough knowledge or understanding as a community to understand what does good tokenomics look like. And I think the first part in addressing that problem is being able to say, I don't understand what I'm looking at and I don't know what works because I've seen so many different ones. I just set a threshold after looking at many of them and said, okay, I'm going to use a 50% threshold of what looks desirable and what is not desirable. And if 50% or greater are made available to the community through liquidity pools, yield farming, airdrops, whatever that mechanism is, because it's like a coin toss. So I just used 50% as a coin toss number and said, well, I guess greater than 50% is desirable. Some of them are upwards of 75, 80, almost 90% are available to the general public through the mechanism that they've already deployed. They've already created and deployed the mechanisms to do it, right? So yeah, that's my take on that. And I would say based on history, I look at Ethereum because whatever happened on Ethereum can also happen on Cardano. And there are a massive number of tokens where they start off at a certain price, they spike up, and then they drop down. And some of them recover. Some good examples are Uni and Uniswap and SushiSwap. Just these examples where they started off at a price, went up, down, and returned somewhere near the original price. And then there's many tokens, thousands, over 9,000, right? Are over there where they just die and they never recover. Sirin is a good example. That was the first blockchain phone that was going to launch in 2018. And as more years went by, I bought Sirin tokens. I didn't buy them because I was buying a Sirin phone. I was buying them for the pump and dump game or whatever they're going to do with the token. Not pump and dump game, but is the number going to go up? So you got to look at your motivation in looking at the tokenomics and say, is the number going to go up, right? And it went down and it never came back. And that's just a lot of tokens. Now, there are some good tokens out there. Well, the examples I gave. But again, I haven't figured out the magic sauce. I've just looked at all these different tokenomics and say, is a good bit available to the community? Well, maybe that's good, but I really don't know.
Fantastic. Yeah, I mean, it's quite a deep area as well. And what is right and wrong, and for a kind of nascent industry that's building. And then, there are some models I've kind of had a look at out there as well of what should be your tokenomics and your vesting and all the rest of it in terms of distribution. But, there isn't any kind of hard and fast kind of guide as to this is what it should be and this is how it should work, right? But of course, pump and dump behavior is something we should also be aware of. But as you said, sometimes some pumps and dumps aren't always bad. But I found that quite rare. That I think you'd agree, Rick, that kind of suspicious behavior of a community that's just driven by the price of it. They pump it up, and then you can gauge those ones quite quickly, though. Definitely, Husky.
Sure. So I think one of the things that people often overlook is the actual liquidity of a token. So if you look at, I've used TapTools and I've looked at it, and all of a sudden you see the top gainers chart, and in the top gainers chart you see that some random token made a 1,000% pump, and you may be thinking, wow, that's very impressive. And that's until you look at, specifics of the token. I've seen some tokens pump 2,000% with a 10 ADA buy. So I guess when it comes to the token price, pay attention to the liquidity pool. How much liquidity is there in the pool? That actually is a huge red flag, especially with the pump and dump tokens that are starting to pop up on Cardano. Is you'll see them often make a reference to their price. Hey, look, we went up 100% today. And then you look at the price and it was a 200 ADA buy, which means that literally 200 ADA was able to pump the price by 100%, which usually indicates there is little to no liquidity. And basically you are the one that's going to be providing their exit liquidity to whoever the holder of the token is. So percentages, while they are important, there are bigger numbers behind those percentages that people should be aware of, such as daily volume, such as what's in the liquidity pool, such as how many holders hold that token. All of these things matter when it comes to tokenomics because that's how you end up getting destroyed.
So really, it's about kind of having a more holistic view of the token rather than just the price. Look behind it and look at what's actually kind of driving that price in terms of what you said. Low liquidity, for instance, could be very easy to pump up the price. And obviously look at other things like volume and the holders.
With tokenomics, it's always like beauty is in the eye of the beholder. It kind of goes by that same thing, right? If you're an ambassador, then you would like a bigger allocation and you'd like those tokens sooner. If you're, the person just holding and using the token, you would like to know that people aren't going to be dumping on you right away. So you probably want good vesting and stuff like that. So it all depends on like where you're looking at it, because these teams do need funding. Some of them like don't have any kind of runway or had a VC that helped them out. So they are going to be using their tokens to pay their team because they paid them out in equity and stuff like that. So those are all things you're going to have to like look out for. And then it's just going to be based on your risk of like, hey, they did a token generation event before they even had a sale. And now, these tokens are going to be unlocked here in 7 months, 8 months. That's just something to kind of look out for yourself. So that's where it goes there. And then the thing I want to talk about earlier was just with community is like, be careful, like even with like any kind of person who's like very outspoken and influential. A lot of the times they'll onboard them as an ambassador because it just makes their brand look better. So just be careful. Like if somebody's an ambassador or something, it doesn't 100% mean that they just love this project, but now they are, getting paid to actually talk about it. So just be kind of careful there.
Really good. I mean, that really brings it home to the FTX and the cult of personality, right? Kind of having this like leader talking to all these politicians and people thinking he's a savior of crypto. And look how that one turned out. He lost 8 billion. But anyway, moving on. Thank you for those points. Good vesting, obviously a TG before a project. All of these things are things to look out for. Not obviously always suspicious, but definitely things that you need to dig deeper into. Alex.
Yeah, so when it comes to token price, tokenomics, it's really important to use your tools at your exposure that you have that you can use. So there's a lot of things that these projects are doing nowadays. Like it's been mentioned multiple times that these projects are getting smarter when it comes to hiding the anomalies and faking anomalies. So some things we've seen on TapTools is someone will make a fake token. So for example, a fake AGIX token. They'll use the exact same name, the exact same logo, and they'll trade the token between the team members, and they'll just trade within themselves. And before you know it, there's over 100K in volume, but that doesn't necessarily mean that's actually real people trading. It's just an artificial way to make it seem like it's a real token. So it's really important to understand who's trading the token. It's something that we're trying to provide through TapTools. And on top of that, with the vesting, with tokenomics, there's a lot of times, a lot of these projects, they're launching a token and their vesting schedule, the team is being paid before they even have a product live on market. So that is something really to pay attention to is when it comes to vesting is, are these VCs or investors or team members being paid before anything actually happens to market or goes live?
I found it pretty hilarious. Husky lost access to 1 trillion tokens yesterday, and today he's educating us on tokenomics. You just love crypto.
Thanks.
Right. So in terms of more serious side, I must admit I am quite ignorant in the area of tokenomics. It is one of probably the most complex areas of crypto. So I've been taking an idiot's approach by asking people that I think are smart to help me, people like Husky. Now, come to think of it, that might be why my portfolio is down so much. So next time I'll make sure to ask smarter people. This is one of the things that require hard work and grind. There's no shortcut to learning tokenomics. Have to just sit down, put in some work. So I want to know how one can learn token economics properly. If someone has good tips, I'm eager to hear. Although I'm assuming that guides written by crypto people, they're good, but probably going to be limited because like what Rick said earlier, a lot of that is like intuition and copying what other people are writing in the tokenomics section. So I'm assuming probably a proper token economics guide would be written by somebody like a mathematician or economist in combination with a crypto expert. I don't know. I'm just guessing. So if anyone has a good tip on crypto tokenomics 101, please do share.
That's fantastic. You're absolutely right. I do a lot of research all the time, and yeah, there isn't actually many. And I came across, honestly, if I remember, I'll definitely ping it to you. It was this lady who's an economist, and she's specialized now in token economics. So it was very interesting. But I'll definitely ping you that. It was just a YouTube channel, and she discusses various areas which I found interesting. A lot of good points were raised in this area of kind of price of the token or token price behavior and tokenomics. Very important area. What we established is there aren't any hard and fast rules realistically out there for us to look at, but there are definitely signs that we can see if a project's wrong. For instance, Rick raised a really good point. I love the fact that he said 50%, community distribution, and it's like tossing a coin, but I love it. You got to have kind of methodology, what's right. But the more obviously there is for the community, without skewing, obviously, away from the actual, if you like, project itself is very important. Make sure, obviously, you look at things like daily volume and the holders of the project. Look at, for instance, projects that are launching tokens before even having a project. There might be something suspicious there, obviously, when there's no project, and what do they want the money for? I mean, it could be a small team with genuine intentions, or it could be a team that's obviously got ulterior motives. Look at the vesting schedules. Alex, please.
Yeah, I think it's also, we haven't mentioned, is it's really important to take in consideration the emissions for a token. So when are these tokens coming out? How long are they going to be coming out for? If 100% of the tokens are out in the wild 2 months into the project, that's a major red flag. Projects who plan on building for the long term, for example, World Mobile Token, have emissions that are going to last for 20 years, which lets you know that they're going to be building for a long time to come. It's not just a 1 month, 2 month, 1 year project.
That's a really good point. Thank you, Alex, for that. And yeah, we all love, I'm sure, World Mobile Token and what they're trying to do with this interconnectivity. And wow, a 20-year emission kind of distribution for the tokens is very much long term. And yeah, probably a good sign for people to say, well, this is here to stay.
I would like to add that the emissions rate, that's another complex thing that we got to try to understand better. And I'm glad Alex pointed that out. Because some token projects, where I shouldn't call it a project, some token businesses where they actually have operational dexes, they might be using the school of thought that says, rip the Band-Aid off and get those tokens out into circulation. I don't know if that's the best approach, but there are some people who prefer to use that school of thought, and their token price will reflect that. Where if it's going to decline, they're going to get it over with and get it declined, and then the users using the token will naturally bring it back up. Again, this is really complicated stuff. And an example with Drip token, what we've analyzed is we're going to stretch it out over 8 years based on supply and demand, with future contract called year 9, that instead of burning tokens, we just send them into the future, right? We'll have that information out in a couple of months. We're hoping it works. We've done a lot of analysis based on the supply and demand. So it's not just hope, it's actually research and analysis. And I do have, well, I had them up here. I pinned a tweet down below the space that shows a risk assessment that has evolved over time. So if you get a chance, look at that tweet that's down below this space that we're in, and it asks the questions that we use for doing risk assessment, because again, you wouldn't know if something is a scam or incompetence, but the risk assessment helps you figure out how many tokens are in the hands of the team, and how many tokens are concentrated into one wallet. Those are some things to think about. And it also depends on how they plan to deploy those tokens. They could be locked in a smart contract. They could be locked behind multi-sig. Or are they just in possession of one entity that plans to dump them? I mean, that's hard to know. You can't know what people are thinking. You can't know what's in their hearts and minds. But you can look at some data on chain. I'll give a shout out to Zerberus as well. Zerberus does a lot of on-chain analysis. They're not here today. And if you're not following on them on Twitter, it's XERBURUS, Zerberus. They do some analytics as well as tap tools. So just make sure you read over that information. It doesn't make them the gatekeeper of red flags. It doesn't make them the only people who can raise those red flags. It just gives you another resource to look at and say, well, what information am I getting from tap tools? What information am I seeing from Zerberus? Are these red flags starting to show up? There's another Twitter account. Follow him. It's called Dr. Fake. And that person appears to be an expert. I use them as a resource once in a while. I check their Twitter account and see if there's any red flags popping up over there. That person does a little bit more in-depth research on projects where they look at could this be the same team that has rugged before? Could these be the same people that have rugged before? And along with what Miss Dumpling had said about using your intuition, I would like everyone to have a think on it and ask yourself, these projects that do fail or rug, if you look on their website, it might show 20 people on there. They've all got all these team members. They've got all these advisors. Are those people actually real? And some of these researchers look into, are these people shown on the website real? Are they members of something that has previously rugged? Is that team talking to their advisors? Like, a good question for Ardana would be, they've got all these advisors listed on the Ardana website. Did they speak to those advisors before they decided to put the project on hold? I mean, because that was the last communication I understood, right? Are they talking to these advisors? Are they acting alone? Are those people that are posted on the website real people, right? So those are all things that you could ask yourself.
Thank you, Rick. I want to add an extra point is what you said. The people on the website, are they real? Also, are these people actually aware that they are being put on this website? That I want to bring a segue to doxing. In crypto, we rely on doxing quite a bit as a measurement of trust. The way I see it is that it's a means to an end, and it's not the only means. Probably not the best means either. I'm saying that because when we look at the rugs in crypto, as big as the likes of Celsius, FTX, Luna, or as recent and intimate to us as Flicto and Ardana, the team members were doxed. By the way, even after their rug, Flicto team members still sent me LinkedIn invites. I had no idea what they were thinking. The point being, doxing offers a level of security. And although, in my personal opinion, it's more of a garden fence than proper barbed wires, doxing hasn't seemed to have stopped many ruggers from rugging. So that's one of the caveats when I look at projects and assessing them. So what's the solution then? That's the real question. I believe we're currently relying so heavily on doxing, trusting the government issued IDs, because we don't have a great alternative to doxing. Sure, in the future we have DIDs, SSIs, but these things are still so new. History hasn't really been built in that regard. We still need some time to build up the Web3 identities. But until then, what can we rely on? I don't have an answer for that. I think doxing is like a crutch we can use, but it might not be the only end-all and be-all solution. Happy to hear anyone contributing, adding more to this topic.
Yeah, I would like to add to that doxing is another factor. If you look at the risk assessment I pinned down below, these factors add up. So if the team has either a working product or a private alpha that the community is allowed to see, or public beta, right? You look at that. You look at the tokenomics. You look at, are they doxed or not? And the more positive indications that you get, that builds your confidence. And what those are the risk factors starting to accumulate, because risk is a cumulative number, okay? And it can be quantified. So the more positive factors that are going in favor of a project, the more likely the project is either not a rug or not incompetent, and possibly more likely to succeed. And so you got to look at the factors and allow them to accumulate as you tick the boxes and say, yep, okay, it has this, it has this, it has this. But while you're doing that, keep in mind a scammer tries their best to look like the real thing. So hence we have things like FTX out there who did a really good job of looking like the real deal, when in fact there were other factors thrown in there as well. They may have been a real deal, but they did bad things with their money. So cumulative risk factors, they start to build up into what's the higher and higher risk categories, right? Because you can't know what's in their hearts and minds. You can only know what you can see and what information you can get by asking questions. So I encourage everyone to ask questions. and accumulate those risk factors and say, is it super high risk, or is it just typical crypto high risk? And that'll probably help you out. And doxing is just one of the many factors involved.
So I think it's very important to understand what's going on with the code when it comes to a project. So, for example, Ardana, a lot of people were just believing that there was all this building going on, when in reality it was just a website, a homepage, and for you to be able to buy a token. And if you look at their GitHub, it's really easy to see that essentially every change, every tweak that they've made with their code had nothing to do with their protocol, but had everything to do with just simple things that not like just like UI fixes and changing team members on the page. And you have to understand that you have to look at the GitHub and really realize what's going on and what's actually being built and what's actually being done. Just because there's a GitHub repository that's being added to doesn't necessarily mean that any building is happening behind the scenes.
I need to get off, so I'll make a final comment. It's a bit of long-winded, so please bear with me. Not completely related to smart contracts and codes. It's about this space. A few weeks ago, Wing Writers DM'd me to share this idea with me, doing a Twitter space on Project Red Flags. And then we exchanged a few DMs to define the guest list. And then we booked the time to settle everything. What happened later is what impressed me. They shared a draft agenda with me and made modifications after getting the feedback. A few days later, I was properly amazed to receive a long, detailed Google Doc detailing the topics and agenda of this space. So if you have been in this space and you have been feeling it's a properly run and smoothly run space, no time was wasted, no bullshit, this is not a coincidence. I can see hard work was put into it. I know because this is basically what I do in my dumpling spaces. So a big shout out to Wing Writers for doing this space, and that doesn't necessarily directly benefit you or your token. I'm sure you get some street cred from it, get some appreciation from it, but I ultimately appreciate you doing this in a proper professional and respectful way. It's a pet peeve of mine for people to run a space and not respect other people's time. So personally, especially appreciate when you be respectful of our time in doing this. Thank you, Wing Writers. And thank you for everybody who contributed. I can hear that all the guests and the co-hosts, you're all so prepared. Appreciate that so much.
I guess I'll just say my last say. I think it's very important to do your own research. It's a quote that we always hear. Everybody always talks about doing your own research. And ultimately, this is crypto, this is Web3. Your decisions are your own. And if you're not the one that has done the proper research, you really can't blame the influencer that shilled you the token, because you should be the one doing the research on any project. So Web3 is about responsibility. Web3 is about you doing the research yourself and taking accountability for the actions that you take. So if you have doubts about a project, ask them questions. If those questions are not answered, it is up to you to make the decision whether you're going to invest, continue to invest, or step away from that project. So it all goes back to be accountable for what you are doing.
Yeah, so I would just, I do have a hard out at 1:20, so I'm running kind of late. But I'd like to say just thank you for having the space. And it's, again, Hosky hit the nail on the head there. It's just think for yourself, think critically, and use your tools that you have to your exposure. And yeah, man, just really just, again, just think for yourself. That's the biggest thing. Is FOMO is such a big part of our space. Quick money, easy money. Usually if it's too good to be true, it is. So thanks again, Wing Riders. And I do have to hop out of here, guys. So thank you.
Well, I was listening to the space, and I was thinking about the space and the topics beforehand, and I had a couple of minutes of things I wanted to share too, just kind of give my expertise and input, but I'll try to keep it super brief because I know you only have a few minutes left. But I just wanted to reiterate some things. And my background really comes from looking at things from a malicious perspective with my cybersecurity background, but it all applies the same whether it's not or right. And all of these things were really already mentioned on the call. I think Denzel Washington has a quote about not confusing movement with progress, right? Seeing projects doing things, that doesn't mean, or seeing people do things doesn't mean they're actually making progress or, accomplishing things. Um, I would say that a lot of this call, if I had to summarize it, it's really about a thing I talk about a lot around correlating information. If I'm about to get into something or involved with something, I start looking at their social, the person or teams or whatever entity is. I'll start looking at their social media accounts. I'll look at how they communicate, like you all talked about, even the temperament of how they communicate. Because if their temperament is poor in communication, then that may be a negative impact to the duration or the success of the project. I'll look at like you guys said, their GitHub stuff, or maybe different. Looking at their different social media accounts, or looking at LinkedIn. What I do is I take all of this information as well as doxing and anything else, right? And I correlate it and I build together what I determine my risk tolerance for that, right? I go into that I'm not going into there to determine if I don't care if I'm going to end up trusting that thing or not trusting it. The point is getting that information to make that determination, right? And what my risk tolerance is from that. And I would say, there's a lot of resources out there as well to help you if you're not confident in deciding these things on your own in your own research. Like, this was also brought up in conversation. There's entities out there like ScatDAO, RiskDAO, they're CRCI. I think they're on the call right now. I just learned about them from Cardano over coffee. They take a different approach, but that's another solution to, using multiple resources as well to correlate a conclusion for yourself, right? And whether your conclusion is this trustworthy or not, and if it's not trustworthy, whether you think it could be malicious or just incompetence, either way, you're getting to a determination, correlating all of that information. So, using those resources out there in the community available, there's a lot of tools out there to use for for if you start, if you think it may be malicious or not. You can look things up on VirusTotal. You could do simple research, website researches on, Google has a safe browsing thing. You can look up their domain information. You can take that domain information and go look up the registrar and dig into it that way as well. So there's a lot of things you could do and tools out there already to help you if you're not confident in doing this on your own, right? I'm sorry, I tried not to get long-winded and kept that way shorter than I expected.
I actually think that what Holy Macaroni said was actually a good way to end it. It's like, if you don't have the knowledge, there are plenty of other entities out there that will do research. So it's always good to go have a look. Um, Again, don't take everything everybody says as a fact. Just simply do your own research.